Hi, this is Neil Clements, and this is The Real Deal with Neil. Today we are talking about how to get your next land investment funded. And so we're going to be talking about the ultimate guide on how to do that. And so we're going to go through land funding, we're going to go through private money, hard money, banks, all the different ways to fund your investment property so that you know exactly how to do it when the time comes. So let's get to it. So we're going to start with ranking the different investment financing vehicles for land in order of highest cost to lowest cost. And so we're going to start with land funding and partnerships. Then we're going to go through hard money lending, private money, banks. And at the very end, we're going to talk about the different, costs of them and actually compare them on a sample property so that you can see how much money and how expensive some of these can actually be versus the reward that they give you. So let's get started. So we're going to start with land funding and partnerships. And so the huge advantage to land funding and partnerships, which if you don't know what land funding is essentially just a partnership where they also pay for the property. And so a lot of people market themselves as funders, when in reality, they just are joint venture partners. Funders just kind of sound better, but funders are normally not lenders. And so the reason I tell you that is because a lot of times with partners is a huge advantage. And although it is very, very expensive, typically 50%, sometimes more of your equity in the property or of your net profit of the property is very, very expensive. But the advantage is that especially if you're new, is that there's no risk. The funder or the partner typically takes all the risks. That means that you can go out, you can market to get a property, you can put it under contract, and then you can assign it to your funding partner or your partner, whatever you want to do. And you can essentially take all the liability off of your shoulders and still capture 50% or more of the upside. And so for no risks, that's pretty darn good, because if you went out and say you just assigned it to another person who wanted to purchase it from you, like a wholesale deal, you would probably make less. And so these funders are really smart. What they did is they said that there's a gap in the market. There are people who, can get lending and can go to banks or hard money lenders or private money lenders, and they can get the financing. They're just going to do it themselves. But there's the other side of people who couldn't do the deal or didn't want to do the deal. They would just assign it to somebody. But there was this middle section of partnerships and funders who all of a sudden started appearing like wildfire 5 years ago, and now there's a ton of them, there's hundreds. And what they do is they kind of bridge the gap between wholesaling to where you make more money with the same amount low risk as wholesaling, but you don't make as much as if you were to do the deal all by yourself. And so huge advantage in that. There's a lot of people who do it, and there's a lot of people who do this every single time. The other huge advantage is there's no money out of pocket, there's no risk, and you can close quickly, a lot of times within days after you assign it to the funder. And so, like I said, the tough part is that it's just really, really expensive. But I'll tell you that this is exactly how I got started. There weren't necessarily land funders when I got started. I started out flipping houses, and when I did house flipping, the deal that I had with my partner at the time was that I would go out and find the opportunities. I taught classes, I did videos like this, and I had people bringing me opportunities, especially for house flips, to where we would, take them down. We would be able to give a really aggressive offer. We'd put it under contract in my partnership LLC with my partner, and he would bring the funds to buy it. He would secure the financing, and once we bought it, he would pay for the renovations, manage the renovations, and then as the broker, I would sell the property as a real estate agent. And so the huge advantage to me, again, was very little risk. I had no cash in the deal. That was probably my first 50 to 60 deals that I did with him. And what that did for me for 2 or 3 years that we did those 60 deals is that allowed me to build up a huge capital stack in the future so that when he decided, hey, I don't really want to do this anymore, he wanted to retire, he was a little bit older. And so that gave me the capital to be able to launch out for myself and actually go to better sources of funding at a later time. And so I highly, highly recommend that people who are new start here. And while I do think funders, man, they make a ton of money, and yeah, I'll just leave it at that. They make a lot of money, but they add a huge amount of value because they're the bridge between wholesaling and they're the bridge between going and getting your own financing. And so I think they're a huge value to anybody who's new. And honestly, there are some funders who are really, really good guys. There are some that aren't, so you got to watch out for them. They're snakes, they'll steal your deal. So that's something to check into. But anyways, that's funders, that's partnerships. Highly recommend you start there, but you probably won't end up there long term. Number 2, hard money lenders. So again, we're going highest expense to lowest expense. So funders and partnerships, highest expense. Hard money lenders, not as expensive, but still pretty costly. And so in the land game, there really aren't many hard money lenders. There are some definitely well-known ones who are extending capital. The advantage of working with a hard money lender in land is that there's no credit checks, no income checks. They're lending specifically based upon the property and the asset. The other advantage is that they can close quickly. They're pretty flexible as far as the different property types, a lot more flexible than a partner or a funder. And so you can do a lot more properties and you can close quickly on them. The disadvantage is that they are still, I would consider, a very high cost loan. A lot of times they do still require a down payment, sometimes 10 to 20%. Some don't, some do. But in general, the less skin in the game, the more equity or the higher interest rate you're gonna have to pay because it's more risky to the lender, so they have to offset that risk with profit. But also with a lot of hard money lenders, you also have a monthly payment. Again, if you don't have a monthly payment, then you're gonna end up paying a higher interest rate because it's more risky for the lender. Now in land, it costs more than houses. Houses, a lot of times you can get rates between say 12 to 15% with a point or two, maybe even as low as 10%. With land, since there are not many land hard money lenders, these lenders, they hike up their fees. They hike up their interest rates. A lot of them ultimately will lend somewhere around 18 to 24%, maybe points on top of that. What you gotta watch out for the land hard money lenders is you gotta make sure that you're getting the whole story. A lot of them will talk about a very low cost of capital. For instance, 10% out of pocket, 5% out of pocket cost of capital. But, sometimes that can be monthly. And you just gotta watch it. You need to look at your annualized interest rate to make sure that you're actually getting a good deal, because a lot of times you end up paying, say, like 30 to 50% interest on a property, and it's like, how the heck did I get here? Well, it's because you didn't pay attention, because the lender that you were talking to, wasn't talking in terms of annualized interest rate. They were talking in terms of monthly interest rate. For instance, only 2.5%. Total 7.5% cost of capital, only 2.5% per month. It's like, well, 2.5% per month. Well, crap, that's what, almost 30%? Yeah, so like, you can see how it can climb very, very quickly. So just pay attention. Just make sure you know what you're getting into. And I'm not saying that a lender who even charges that much is doing anything wrong. I'm merely just saying that you just need to know your cost of capital to make sure that you're still interested in it, instead of not calculating your cost and thinking, oh, this is a really good deal. A lot of times it's not. Personally, I rarely use hard money. Now, I definitely have, and I really only use hard money in the circumstance where private money has run out, my banks have run out as far as their risk tolerance. And so I'm in the position where it's like, I either do the deal and say make 50 grand, for instance, and maybe I make 40 now because of the hard money lender fees, or I don't do the deal. And it's like, well, I'm still gonna do the deal. It's just a hard money lender for me is not gonna be the first person that I go to, just because I'm at the point in my business, I'm not really looking for, I guess, ease or convenience in financing. I'm more of looking for the best deal possible. And you'll see why whenever we review numbers, like how big of a difference this can actually be at the end. So stay tuned for that. I think it'd be really helpful for you to see. All right, number 3, private money. So the huge advantage to private money is that it's extremely flexible. There's no down payments. A lot of times you can arrange it to where there's no monthly payment either. And so private money is huge. It's great. As far as disadvantages, there really is no disadvantage to private money. Like, as much as you can get is as much as you should use. And so I guess if you wanted to call it a disadvantage to private money is that it's hard to get because it takes relationships over time. It's not like you're gonna just meet somebody one day and shake their hand and say, hey, I need $500,000. You think you can give that to me this week? And they're like, oh yeah, sure. Yeah, who do I make it out to? All right, it doesn't really work like that. That's what takes time. A lot of the private money lenders that I have, believe it or not, came from my brokerage business of past clients, or a referral from a past client that I did on the brokerage side who had some excess capital to invest, especially after like a big property sale. And then I showed them how we could use that money to make double-digit interest returns secured by real estate. And so that's a really, really good conversation to have. It makes a really big win-win for both of us. And so, oh heck, I've paid up to 16, 17% or higher with points before to try to get a deal done on hard money. But on private money, a lot of times I can pay between 10 and 12% because that's where most private money lenders get excited. And so that's the thing, is that with private money lenders, it's all about the relationship. So if you want to learn how to raise private money, I actually did a video, I think it was 2 months ago on the channel, that's called A Simple Strategy for Raising Private Money, where I talk about how to raise $250,000 in private money in 30 days from people that you know and your network. And so if you want to check that out, give it a look. And yeah, we'll keep going. All right, so number 4, banks. So banks, man, huge advantage of working with banks. This is almost exclusively what I use now besides private money. And so the huge advantage of banks is that they're just so much cheaper than anything else. They're the lowest cost of capital. They typically don't run out of money. Now, even if they don't run out of money, it doesn't mean that they will always give you loans. You know, those are kind of two different things. But they typically don't run out of money. And so you can get, millions of dollars of loans with a single bank. And especially if you have 3 to 5 banks, like you can really do some damage as far as your ability to get financing. The disadvantages are that it typically takes an extended amount of time to close, 30, 45 days to close. They have higher down payments. They want skin in the game. And then they also want you to pay monthly on your interest. And so those are some disadvantages. The huge advantage comes from the rates that they're able to give you. And so a lot of times banks are lending around prime for land. So prime today is 7.5% in the middle of 2025. And so with that, and they're normally only charging a point, you can easily see how your cost of capital is substantially lower than like the 18 to 25 to 30% I just said hard money, private money being at 10 to 12%, and then your funders wanting half of your profit. You can see how much of cost saving that this is. Now, the reason that banks are able to give so little, rates is because if you think about how bank operates, well, they pay out like 0.01% or point whatever it is to their depositors. So they're getting people to deposit money. They get it at like almost no cost of capital, and then they lend it to you. And then they even use that money that they have to like loan money further from like the government and stuff. And so it's like, man, banks make a ton of money. That's why some of the biggest corporations in the world are banks. And so, and if you think about it, it's like they have almost no cost of capital. They have staff, they have buildings, and they have everything like that. Of course, regulations they have to abide by, but they can pass along those savings to you while still making a crap ton of money. And so if you want to dive more into banks and like how to work with them, I've actually got 2 different videos on them on this series of Real Deal with Neil. One is why banks make the best partners, and the second is which bank funds it best. And so I love working with banks. I think as you get to be more of an advanced investor, your business naturally gravitates toward private investors and banks because they have lower costs of capital. And as you build a relationship with them, they actually have quite a bit more flexibility. And so I would definitely steer you there for the more advanced investors, while the beginner investors, I'd steer you more toward the front. So to cap everything off, I told you that I'd talk about the true cost of each option. So we're gonna go through what it looks like for each. So let's start with a $250,000 purchase. Assume that we bought it at 50% of market value, and so we would have $250,000 of profit, and that we held the property for 4 months, okay? So with funding, if it's taking 50% of the profit of $250,000, we paid the funder $125,000 for the deal. Now, keep in mind, $125,000, that's a lot of money for anybody, don't get me wrong. But that's a heck of a lot more money that the person made rather than just assigning it to somebody else. And also, they had no risk. They had no obligation to the property if it went sideways. And so who's that for? That's for your new person. That's for somebody who's broke. That's for somebody who's extremely risk averse. And that's potentially for somebody who likes convenience. And so that's what it's going to look like for funding, is that you're giving up a huge chunk of the pie, but you don't necessarily take any risk. Okay, let's talk about hard money. Same situation. So $250,000 loan at 2 points at 18% interest. On a loan like that, you're going to pay $20,000 to hold that out for 4 months. Okay, 125 versus 20, but different risk, right? With the hard money loan, you took all the risk. With the partnership or the funding, you took none of the risk. And so as you shift the risk reward cycle and as you put more skin in the game, you'll notice that you end up making more profit. Right? It's just natural. So who is hard money lender for? Well, hard money lender is for somebody who needs to close incredibly quickly, or for somebody who's not credit worthy, or for somebody who just wants a quick and easy, again, convenience, quick and easy loan to get it done without all the hurdles of a bank or a private money lender or some kind of relationship. Private money, let's say that you got a loan for $250,000. So you came out of pocket 0, right? Same thing as a hard money. And let's say that had to be at 12% interest. Well, over the course of 4 months, you would have paid $10,000. See the difference there? Private money at 12% interest was half as expensive as our hard money loan. It's crazy. So who is private money for? Gosh, use it whenever possible. As much as you can get access to, that's really the hard part, is you have to work at the relationships. You have to put it together over time. You have to build trust with people who have money. And so that's going to be your hardest part with that. But gosh, whenever you can use it, I use it. Banks though, That's going to be the lowest one. So banks, again, $250,000 purchase. So they're going to require you to put, say, 25% down or 20% down. So you get a $200,000 loan, you pay 1.7.5% interest. So over the course of 4 months, you would have paid $7,000. And so guys, I think y'all can see that like I said, as you take more risk, as you have more skin in the game as far as down payments, as your loan gets higher quality, meaning you have more documentation through a bank, have more filters and approvals, and where your capital comes from, it matters. Because, I mean, even if you just compare banks at $7,000 versus private money at 10, you know, those two are kind of negligible. $3,000 kind of negligible on a profit like that. But, you know, between hard money, $10,000 and $13,000 savings, or especially between funding, which, you know, over $100,000 savings on every single option, funding versus hard money, private money, and banks. And so I made this video so that you could see at what point of the cycle you're at in your land investing career, where you need to be going through funding. And especially if you're newer, or if you haven't looked at some of the more advanced, you know, concepts of funding like private money or banks or anything like that, maybe it's time to explore some new funding options. Or maybe it's time to know that, you know, crap, I'm giving away all this money to funders and hard money lenders and I'm paying this obscene amount of interest. Like, when does it end? Well, it ends as you grow your business. And so I hope you really enjoyed this video about funding. I hope it's been extremely valuable to you. And please check out the other videos that I've done and a deep dive on most of these other subjects. And I'll talk to you soon.